and the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. And now it's about technicals and on-chain stuff and just trying to nail the timing, because we've both identified it's like next 3 months for sure higher. There'll be
Yep.
consolidations next 6 months, probably next 12 months. That's kind of how it feels, pretty certain. Now the question is whether it's next month higher, which I actually think it's we probably end up higher within 2 weeks' time than we are today. Put it that way. I don't know. So
Hey guys, welcome to Everyday Finance, a deep dive into Trump's bold new tariff moves, as well as how they could covertly boost the adoption of Bitcoin, is provided by Raoul Pal. While this is going on, BlackRock, the largest asset manager in the world, is increasing its investment in Bitcoin. The spot exchange traded fund, ETF, offered by BlackRock, known as IBIT, has recently acquired an additional $25 million worth of Bitcoin. Despite the fact that the Nasdaq 100 is reeling from the fallout of tariffs, Bitcoin is currently hovering around $83,300 and showing slight gains. Bitcoin continues to outpace the technology-heavy Nasdaq by a significant margin, despite the fact that both Bitcoin and stocks have experienced a decline for the year. BlackRock's aggressive purchases demonstrate a strong conviction in Bitcoin's long-term value, which is a sentiment that CEO Larry Fink hinted at when he warned that rising US debt and global uncertainty could make Bitcoin a better store of value than the dollar. Nevertheless, analysts such as Eric Balchunas of Bloomberg believe that Bitcoin is more comparable to hot sauce in that it is powerful, but it is not exactly a safe haven. Watch ahead.
oh, the talk is tariffs. I know it's all about what's happening today, what happened yesterday, what did Trump announce? But I go back to the framework that I've been using, which is liquidity. And the liquidity has led this whole price action by 3 months so perfectly. It's been sort of insane. And, I'm just, Peter, I'm just going to share a chart. This is from Global Macro Investor, just to kick us off on how I'm looking at this. Now, this doesn't have today's price action, but again, price action in Bitcoin is actually not that bad today. Not like the Nasdaq's getting nuked, and I'll talk about the Nasdaq in a sec as well. So, global M2 versus Bitcoin, either a 10-week lead or a 12-week lead, doesn't really matter. But basically, should be the bottoming zone. What is happening here is there's a reaction to the Trump headlines, yes, of course, but a lot of this was baked in the cake because of liquidity tightening by the rising dollar and rising rates last year. Now, you can see from the black line, which is forward looking 10 weeks, and this doesn't take into account the current move in the dollar and rates and oil, is actually financial conditions are easing really, really fast. The NASDAQ is all the same as well. You can see from the chart here, we're kind of in the bottoming zone. Forward, we've got global M2. And the financial conditions index is screaming higher, whilst the economic surprises index of how the economic activity is versus expectation should start raising too. So the growth shock has largely been put in the price. I think I've got somewhere here some of the charts of the growth shock itself. I'm just trying to flick through. So yes, that's the financial conditions index. Bitcoin, 3-month percentage rate of change, has actually priced in all of the tightening of financial conditions and should very soon start pricing in the other side, which is this financial conditions easing. Now, this will be much higher again because of the last few days. So for me, it's kind of expected. The last time you came on, Jamie, was pretty much at the tail end of a panic back in September last year. At the end of that god-awful range, nobody believed we'd ever get out of it. You came on and said, I think we're all going to be fine. I was of the same, and it all figured out. So lay it on me. Where are you in this?
Yeah, well, I mean, we both have our own hypothesis about what drives markets and then we build frameworks around it. And obviously, your framework has informed a lot of what I do and how I think as well. But I created my specific macro framework based on the inputs that I saw and backtesting. And you build these, personally, I build these frameworks because I'm trying to eliminate a lot of the subjective bias that creeps in when you're investing to try and reduce errors. And my models are also saying that financial conditions as of starting in February and then accelerating into March, mid-March, all started to pick up and gave me the signal that Bitcoin should do very well over the next, over the foreseeable future, 3 months, 6 months, 12 months.
Yeah.
I couldn't predict what the Trump administration was going to do with tariffs, especially that formula that they've applied. I think that has caught everyone by surprise, even those that expected Trump to perhaps surprise on the upside. And so even with that, you now get so much more pressure on the Federal Reserve to act. And with that, we know typically asset prices respond quickly. And so it does seem like this is a growth shock that will be met with a requisite amount of stimulus. And that typically is very, very bullish for risk assets. And what's interesting is that Bitcoin, is 3 times the vol of the S&P, maybe about 2 times NASDAQ or 2.5 times NASDAQ. The price action over the last week and a half, maybe even longer, has been surprising given the moves that we've seen in other risk assets. So, of course, if things crater, if something else happens, if there is a geopolitical blow-up or if there is other things which we can't foresee, then all bets are off. But that just accelerates, again, the response that will be required from central banks. So, it's like I describe it as investing in Bitcoin specifically, not just crypto, but like Bitcoin is like playing chicken with central banks.
A storm may be brewing for Bitcoin and alternative cryptocurrencies. Following President Trump's Liberation Day tariffs, the price of Bitcoin remained stable between $80,000 and $90,000, barely outperforming the stock market. On the other hand, Ethereum struggled to maintain a price below $2,000. With the Nasdaq 100, S&P 500, and Dow Jones all recording their worst week since the year 2020, the stock market experienced a significant decline. What is the true jolt? A dangerous combination of inflation and slow growth. Stagflation could be caused by Trump's tariffs, according to the chair of the Federal Reserve, Jerome Powell. Powell has made it abundantly clear that the Federal Reserve will not be lowering interest rates in the near future. His position was echoed by other officials, which raised concerns about the possibility of higher borrowing costs remaining in place. Generally speaking, this is not good news for stocks or cryptocurrency. Watch more.
And, that just so people are aware, financial conditions, different people measure it different ways, but one of the easiest ways is, an amalgamation of rates, the dollar, and some commodity prices, input prices. And we've seen a massive move in oil. We've seen a massive move in rates. They formed a nice head and shoulders top. Looks like, we should see rates back down at 3.5% in 10 years. And we've seen an enormous move in the dollar as well. It's a gigantic move in the dollar. And the dollar is the big daddy of all liquidity measures because everybody's in debt dollars. And I said this from the beginning is like China needs a weaker dollar. They will agree tariffs in the end, whatever the negotiation is. They'll agree something because they need the weaker dollar because they need to roll their dollar debts. Everybody needs to export goods, and you need a weak dollar to have a stronger global economy. The US needs to export stuff. Everybody wants a weaker dollar, and the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. And now it's about technicals and on-chain stuff and just trying to nail the timing because we've both identified it's like next 3 months, for sure higher. There'll be consolidations next 6 months, probably next 12 months. That's kind of how it feels, pretty certain. Now, the question is whether it's next month higher which I actually think. I think we probably end up, higher within 2 weeks' time than we are today. Put it that way. I don't know. So how are you thinking about? Let's kind of zoom into your framework, I guess, in a bit more detail, because you've probably got a bunch of charts to show and other bits and pieces.
Yeah, I'd say, like, I mean, when I looked at the DXY back a couple of weeks ago and saw that massive move down, which was a 3-day consecutive move of more than 2.5%, which was in fact like a 2.5 standard deviation, 3 standard deviation event. Every single time that had happened in the past, over the next 90 days, Bitcoin was higher and substantially higher. I've actually got a chart around that as well.
Yeah.
So I might just bring that up. But so you can see that on your screen now. So this is just the Bitcoin chart with these large DXY moves that occur over time. And the subchart is just showing you the percentage change. But when you look at what happens over the following 90 days, and there's only been 8 of these in the last sort of 12 years. So sample size is relatively small. So take of that what you will, statistical significance, from a purist standpoint might not be there, but at least we've got over 12 years, 8 occurrences. Every single time Bitcoin is up substantially. And this yellow line here is just the average of all of those 8 instances. Now we can see where we are today. We're right at the bottom. This is the worst performance post that signal of the previous 8 signals that we've seen over the last 12 years, but pretty much in line with what happened in 2015. On average, though, Bitcoin is up 37% 90 days later, and 1 standard deviation move above that is 63%. So that really brings us towards 120, 130,000 if it's just an average move. And if it's something more, then, it's actually probably about 110, 115,000. But if it's a 1 standard deviation move higher,
but new highs.
Yeah, it's new highs. And so that was giving me a lot of, I guess, confidence when we started to see that big dollar move 2 or 3 weeks ago. But since then, it's actually depreciated a lot more. So I think that that really does set up for a strong move. Now, the problem that we have just in the short term, Raoul, I think, is around tax loss or tax season in the United States. And if anyone's looking at their crypto portfolio right now and they've bought in the last 6 months, they're on tax losses. So they might actually dampen things down. The other, I guess, counterpoint to that is I think FTX reimbursements are starting to flow or will be flowing very soon. So how that gets recycled back into the market will be very, very interesting. I think Bitcoin will catch a bid first with people who get some sort of recovery money from FTX. And so that may offset sort of the tax loss selling that we typically see around this time. They don't factor in anything to do with macro or liquidity. And so the bull score for Bitcoin has dropped to around 20. The last time it did that from being at 100 was really the May 2021 correction. And so you're left assuming that, okay, this is just like May 2021. The problem with that in May 2021 was that we were 13, 14, 15 months into a massive liquidity expansion, which had already moved prices substantially higher. By that stage,
Lost your sound, Jamie.
oh,
There you go, you're back.
Yeah, so I was just saying that there is a lack of context with using on-chain data alone because it doesn't factor in liquidity. And so when the last time the bull score dropped like this was back in mid-2021, but that was at least sort of 12 months to 15 months after the massive liquidity expansion that we saw in the response to COVID. Now it's dropping just as liquidity is about to expand after a 3-year contraction. So there's just so I pointed that out in the research.
He did not hold back. He criticized Powell, demanding that immediate rate cuts be implemented and accusing the Federal Reserve of playing political games. However, the independence of the Federal Reserve stays the same, and analysts warn that a more hawkish Fed could continue to put pressure on cryptocurrency. On the other hand, there is a bright side. The plummeting prices of crude oil and copper, in conjunction with the decline in bond yields, are indicators that the economy may be heading in the direction of a recession. That has the potential to compel the Federal Reserve to act. The odds of a recession have just been increased by Goldman Sachs, and the company now forecasts 3 rate cuts for this year. A potential lifeline in an otherwise volatile market, Bitcoin and alternative cryptocurrencies have a tendency to rally whenever the Federal Reserve relaxes its monetary policy. Thanks for watching.